In today's video, we will share the ETF that provide an 18% yield, which is TLTW. Looking at the juicy yield from this ETF, is that a good time to buy this ETF? To reply the previous comments from our audience, I will share my insights on this ETF TLTW. Hello everyone, welcome back to STA Club, the club for stocks trading and analysis. This channel is dedicated to provide you with high quality tutorials, guides and insights that demystify the world of trading. Join us as we will share more trading secrets and valuable insights. To stay updated and be the first to access this valuable resource, hit the subscribe button now. By subscribing, you are opening the door to a world of trading and maximizing your potentials for success. In today's episode, we are unlocking one unique investment strategy with the iShares 20 plus years Treasury bond Buywrite strategy ETF, also known as TLTW. Strap in, because we are going to break down the mechanism of TLTW in detail and explore how it could potentially generate an impressive yield of 18% or more over the trailing 12 months. Before we dive in, a quick disclaimer. The information in this video is for education purpose only. It is not a call to buy or sell. So TLTW is a fascinating ETF that tracks the iShares 20 years Treasury bonds ETF, which we call it TLT. It is one of the bond ETF that we mentioned in our previous video, and we talked about the potential of TLT during the current market environment. You may watch our previous video if you don't know why we think TLT is something we are looking at right now. Since our last video introducing TLT, it has gone up to 10% within a month. So how about TLTW? Before that, we need to know what makes TLTW stand out. It is because of its Buywrite strategies. TLTW is not only holding TLT but also implementing an option strategy, which we call it selling cover call to generate extra yield income. I think many are not familiar with the option strategy. Let me explain what a cover call strategy is. A cover call strategy is selling a call options on the stocks that you are already own. When you sell a call options, you are giving someone else the right to buy the stocks from you at a predetermined price, or we call it a strike price, within a certain period until the expiry date. By selling a call option, you receive a premium upfront from the buyer of the options. In return, you take an obligation if the buyer decides to exercise the right to buy the shares at a predetermined price. You are obligated to sell it to them at the price regardless of the current market price. So, selling a call options means you are betting that the underlying stock's price wouldn't rise significantly above the predetermined price before the expiry date. If the stock's price stays below the predetermined price, the option will likely expire without being exercised, and you will keep the premium as your profit. However, if the stock's price surpasses the strike price, you might have to sell the stocks at the strike price, potentially resulting in a loss if the market price is higher. TLTW may provide enhanced income compared to the traditional US Treasury bond by selling monthly cover call options. Each TLTW holds shares of its respective underlying and sell monthly call options in order to increase its yield income. Each month, the ETFs are designed to pay income distribute with two components, which are dividends from the underlying ETF, which is TLT, and any profit from the option sales. TLTW's approach primarily through its cover call strategies offer potential benefit and trade-off for investors. This ETF aims to provide an attractive yield by sacrificing some of the potential upsides in TLT. The cover call strategies help mitigate potential losses if the price of TLT declines, as the income earned from selling call options can act as a cushion against such losses. Besides that, the best case scenario here is when the TLT price moves sideways within a certain range. TLTW would able to make profit from the cover call strategy, which increase the yield distributed. In conclusion, TLTW give up some potential upsides of TLT in exchange for its 18% income yield. It can offset losses if the price of TLT goes down by its cover call strategies. For investors that like to have less volatility, TLTW could be something you want to look at, as the underlying asset of TLTW is TLT, which typically perform well when interest rates fall. Investors in TLTW could potentially benefit from rate cuts or expectations of decreasing interest rates. While TLTW may provide high income and reduced volatilities compared to direct invest in TLT, it is important to note that this strategy has its own risks. There are some risks to consider. While this strategy generates income, it does limit the potential upsides of the stocks due to the cover call approach. As we know, TLTW give up most, if not all, share price upsides in exchange for the high yield. If the rate cut next year is confirmed, there is a good chance that the price of TLT will go up. The price of TLTW will not go up much as it has given up the potential upsides by implementing the cover call strategies. The cover call strategy can cap the potential gains from TLT. If the stock's price surpasses the strike price of the call option sold, the gains might be limited as you are obligated to sell the shares at that predetermined price. It really comes down to personal preference for which sides of the debate is better for you. From my previous video, we know that TLT typically perform well when the interest rates are falling or expected to decrease because bond prices rise in such scenarios. So in this case, buying TLTW can limit the potential upsides for TLT. If you are anticipating the interest rate cut, I think TLTW may not be very suitable for you. But if you think the interest rate would be higher for longer and the TLT price would be going sideways, then you may take advantage of these strategies. For myself, I will prefer TLT in the macro environments. So based on the dot plot from the Federal Reserve, Fed has actually hinted that rate cut might happen sometime around next year midterm. So I will not sacrifice the upsides of TLT, as the price of TLT may go up when the rate cuts. So it will be the end of the video. If you like the video and think this video has been very helpful to you, smash the like button and subscribe to our channel so that you will not miss out our latest videos in the future. Comment below for any share you want to know. Thank you for your like and share. See you in our next video.